Hey all, welcome to ShareTreck and welcome to the morning show. This is Raj here, your host. Sundays are generally freewheeling. I've just recovered from a massive allergy episode from the morning. I went out to the garden. I don't know what I inhaled, but kind of stuffed my nose and irritated my eyes. I took Claritin, but took almost the whole day. Now I'm feeling much better, and it's almost at the end of the day. So I'm recording this show for you guys. And I have got a couple of things on my mind that I want to talk to you about. One's got to do with the Fed's tightening of the balance sheet, and the other has got to do with the Secret Service data deletion debacle. And let's get started. Today, I want to share a few thoughts I have around the economy as well as the current events. The first concerns the Fed, as I mentioned before, and its balance sheet tightening. The second concerns the Secret Service data deletion debacle. So let's first start with the Fed. Earlier this year, the Fed had signaled tightening its balance sheet. There are two components in the Fed balance sheet that form a bulk of its asset. The first one is bonds that the Fed bought in order to pump liquidity into the market during COVID. And the second is the stockpile of mortgage-backed securities that the Fed bought. And the Fed also renews the mortgage-backed securities when the term expires so that the banks can have the funds available to source new mortgages. So as per plans, the Fed plans to reduce its $8.5 trillion balance sheet beginning June 1st. So they have already started this activity when it will no longer reinvest proceeds of up to $30 billion in maturing treasury securities and up to $17.5 billion in maturing agency mortgage-backed securities per month. So this activity has already started. We are in the first month of balance sheet tightening at this point of time. And beginning September 1, these caps will raise to 60 billion and 35 billion respectively for a maximum potential monthly balance sheet roll-off of 95 billion. So that's the quantum that we are looking at. This means starting this month, 17.5 billion worth of funding towards housing sector is going to be removed. The result will be tighter liquidity with mortgage lending institutions. This month's tougher qualifying standards for mortgage will only get tighter as time goes by. As a result, we'll see fewer buyers in the housing market. This translates to larger inventory, longer time to sell the house, a buyer's market with falling home values. This is what we are looking at. The falling home values will not only be uniform, the falling home values will not be uniform around the country, but pockets where battered industries dominate will be harder hit, and also markets that have experienced a boost during COVID will now experience a drop in buyer interest and increase in inventory. Expect around $52.5 billion to be siphoned off from the mortgage funding by the end of this quarter due to the Fed's balance sheet tightening measures. The fourth quarter will see doubling of this squeeze with around 35 billion being retracted from the MBS renewals every month. And we will end the year having withdrawn 156 billion from the mortgage funding. So also remember, bond purchases are going down much faster while interest rate might raise 50 basis points to 70 basis points next meeting. Oil prices are also moving down and recessionary environment is slowly emerging. This means that when the Fed reports next, we should see a more benign Fed. The political fallout will be mixed as people owning homes will be disappointed with value drops while those aspiring to buy may not qualify despite falling house prices. This makes the midterm elections even more daunting to anticipate. When viewed along with high inflation, to conclude, I think we only look at the Fed interest rate action most of the times. But if we consider the bond and the MBS action, Fed is mighty aggressive and this should show up in the CPI along with lower oil price and wheat prices. Now, moving on to the data debacle, let me share my personal experience. I spent a lifetime as software project manager and have done different types of projects, including trading platform switch, brokerage platform, as well as call center migration, to name a few. And one of the main questions in most of these projects is always around data retention and data migration. Key questions are around duration of historical data to be maintained, how it will be made accessible when the new system goes in place. We have technical sessions on conversion of data and data mapping, etc. So now coming back to the Secret Service deletion debacle, it is wholly inconceivable that a premier organization would be so cavalier in its approach towards data that is especially at the core of its operation. Imagine a crime scene. The first thing that the prosecutors ask is to retain data pertaining to the incident for further scrutiny. So unless you are living under a rock, you would know the significance of January 6th in the history of USA, and you would also not take special care to preserve the data, given that you are the premier investigating organization that will be called to investigate this event, is totally inconceivable. In our channel, we won't spawn any conspiracy theories. So let us say it was sheer incompetence until it is proven otherwise. So with that, I think I would like to end my session out here. You may already feel that I have a nasal voice. So I'm still in the process of recovering from my allergy. Hopefully I'll be fine by tomorrow. I hope you have a great Sunday when you see this video. So with that said, I would like you to press a like out there to help YouTube promote our channel to other viewers. And if you're not yet subscribed, please subscribe and help us grow this channel. Thanks and have a great day. Bye for now.